a lot of the high yield debt market has gone into leverage loans and CLO, and so as a result, it's off balance sheet. I mean, it's private, and there are parts of that market more than the particularly high yield debt market. Although, if I was to take double B, some triple B types of debt, I think that it's more than fully priced.
Right.
But Ray, I'm wondering if you can shed a little light on what might happen to the junk market if GE heads towards junk status. I mean, it's kind of trading there based on the credit default swaps at this point. It's headed that direction. If that were to happen, you're talking about GE becoming 10% of a $1.2 trillion market, and that seems like an awful lot to absorb. What kind of aftershocks would that potentially have?
Because I think GE's problems are well recognized in the market,
right,
and is probably reflecting those. Because there's a lot of index funds or ETFs or where the investor experiencing a sting looks at that asset as a number of assets, you could have more contagion to the other markets as they say, I don't want that kind of fund. And then even less stressed funds would experience some sort of contagion. So yeah, there is that kind of risk.
Ray, wanted to ask you about China. I know you just announced a new fund that's actually going to be based in China, and you've spent a lot of time there. Obviously, we are in the middle of what some have already called a trade war, given the tariffs. But just speak to what you think about the potential trade war and how you think it will ultimately shake out.
I think this is the trade war, I think, could be worked out. Trade balances, I think from the Chinese perspective, American perspective, but it goes way beyond the trade war. You know, there is this now competition, real competition for in the world and supremacy. This is the first time since the 30s that we've had an emerging country that is a comparable power really to the United States, and there are issues there. So those issues have to do with property rights. They have to do with access competition. They're geopolitical. They're a number of things. I think that the trade issues can largely be dealt with, but it is it's a broader issue that'll be with us for a long time. And I think what most fundamentally it has to do is a different approach to life, a different approach to how they think governance should work. But as one of the Chinese leaders described, it's basically a top-down versus a bottom-up type of approach. You know, if you were to look at, let's say, gaming, by way of example, playing games, video games, and you go in China, they will have a point of view as to what their kids should watch on video games. It exemplifies this. And so they will control it can't be more than a certain number of hours, and it can't be these types of games and so on. And so that will be like a top-down decision. In the United States, we would not want the government. Right. The system is a bottom-up. And so it is really, it goes back to Confucius in 500 BC. It's a very different approach. And that is, so when you look at the 2025 plan in China, the government believes that they should have a plan for making China great, and they work that plan, and then they'll have coordination between the parts. So yes, the military will cooperate with the tech companies and so on. That kind of activity is objectionable to the United States because that is viewed as something that is different. So that kind of identity issue or those types of rivalries will be with us for a long time, right, even though the trade issue itself, I think, can be dealt with.